back in that bag again. Whoa, whoa.
Welcome to another deep dive. You know we love getting into the weeds on these things. You sent this in.
Yeah.
The history of the Indian stock market. And this is fascinating stuff.
Yeah.
We're going to really trace its whole journey, right?
Yeah.
From how it started to how it is now.
Absolutely. I mean, we've got this great document, a whole historical overview from the 19th century all the way to today.
And what makes this one Inobia,
Yeah.
I think. Especially relevant, as India becomes more and more this global economic power, right?
Yeah.
Understanding how its stock market has evolved, how it's become what it is today, is going to be really, really insightful for anyone following.
Absolutely. I mean, the forces that shape the market, especially one of the oldest markets in Asia, right? Like, just so many different things.
Okay, so let's unpack this thing, okay? Back to the very beginning, the 1830s.
Yeah.
Bombay, what was going on?
Okay. So Bombay, or Mumbai as we know it today, that's where it all started. The 1830s saw the very first kind of informal trading of stocks, not the structured market we see today. The focus, shares of banks and cotton companies. Makes sense, right? Bombay's economy then. Banking and cotton were king.
So it was literally like a direct reflection of the kind of industries of the time.
Exactly.
Okay. So then we move forward a few decades, 1875. This seems like a really pivotal moment.
This is huge. 1875, a group of stockbrokers came together and they formally established the Bombay Stock Exchange. We call it BSE. This move brought structure and organization to what was previously, a pretty informal system. It's a big deal. Because we're talking about the oldest stock exchange in Asia.
Oh, wow.
That's the BSE.
The oldest in Asia. Okay. That's incredible. So then moving into the 20th century, from the early 1900s up until India's independence in 1947, the market expands beyond just Bombay.
Exactly. It wasn't just Bombay anymore. We start to see other exchanges popping up. The Calcutta Stock Exchange in 1908 was a big one, and then Madras, now Chennai, joined the party. Other important cities followed suit. This expansion really demonstrates a growing interest in stock trading across a wider area. It's a sign of economic progress spreading throughout the country.
And in those early markets, who were the big players? Were we talking mostly about Indian companies?
Initially, the Indian economy, and that includes its stock market, was heavily influenced by British companies. Remember, this is during British rule. But here's the interesting thing. Our sources point to a gradual shift. Over time, Indian industrialists started to make their mark. They gained more presence and influence in the market. This period was really setting the stage for what would come later. Greater Indian ownership and participation in their own stock market. It's like they were slowly starting to
take control. Yeah, interesting. It makes you wonder about that long-term impact. How much did that initial setup, maybe even those early trading practices from the British influence, how much of that remained imprinted on the Indian stock market, even after it became more Indian-driven?
Right, like a legacy.
Yeah. And we can't forget the global context. These early markets weren't operating in isolation. No. Things like World War I and World War II must have had some impact.
Oh, absolutely. Yeah. The World Wars caused major, and I mean major, volatility in the Indian stock market. Prices were all over the place. This just highlights how susceptible the market was to global events even back then. And you know what? That interconnectedness, that sensitivity to what's happening in the rest of the world, it's a trend that's still very much in play today. So while those global events showed the market's vulnerability, the period after India's independence, that's when things started to shift. India really focused on building a more resilient, domestically driven economy. And that, of course, had a huge impact on the stock market's direction.
Right. 1947 to 1990. India embraces a socialist economic model. So how did that big shift in philosophy play out in the stock market?
Well, with socialism came increased government involvement in pretty much every industry. The state was taking a much more hands-on approach to the economy. And naturally, that spilled over into the stock market. It led to, shall we say, more subdued performance compared to the liberalization that came later.
And during this period, there are some important regulatory developments as well, efforts to kind of bring some structure to this whole system. One key thing, the Securities Contracts Regulation Act of 1956.
Oh, yeah, the SCRA. This was huge, a landmark piece of legislation. It aimed to create a legal framework for regulating stock exchanges across India. The idea was to bring order and standardization to how they operated, like having some ground rules.
So a more organized marketplace.
Yeah.
And we also start to see new investment options emerge, like mutual funds, for example.
Absolutely. 1963 saw the birth of the Unit Trust of India. We call it UTI. This was the beginning of mutual funds in India. And what that meant was individual investors, especially smaller investors, could pool their money together and participate in the stock market. It opened up investing to a wider range of people.
So while the BSE was still the dominant exchange, it sounds like there were some inherent weaknesses because of the regulatory environment at the time.
You're right. The BSE was the top dog, no doubt, but
Right.
it was operating in a largely unregulated environment, and this lack of oversight, well, it made the BSE prone to problems, scams, insider trading, things like that. And this was really setting the stage for some major changes, some serious reforms in the years to come.
Which brings us to 1991, a truly transformative period, the liberalization of the Indian economy. This had to be a watershed moment for the market.
Oh, it was massive. 1991 changed everything. We're not just talking about opening the doors to foreign investors. It was a fundamental shift away from that state-controlled economic model. It was embracing market forces. This unleashed the potential of the private sector. Foreign capital started flowing in. And the stock market, it was reshaped forever. It was put on a completely new growth trajectory.
And with that opening up, there was this crucial need for stronger, more effective regulation. Enter the Securities and Exchange Board of India, SEBI, 1992. Tell me about that.
SEBI was the answer to a lot of the problems. They were tasked with regulating the market, but crucially, with protecting investors. It was all about bringing transparency and accountability to the market and boosting investor confidence. SEBI was a direct response to what everyone saw, the need for a watchdog.
Sadly, that same year, 1992, is also marked by the Harshad Mehta scam. How did that event really emphasize the need for SEBI and further regulatory reforms?
It was a wake-up call. The Harshad Mehta scam exposed the vulnerabilities of the system. It showed everyone that even with some regulations in place, there were still loopholes. It became crystal clear that a strong, independent regulatory body like SEBI was absolutely essential. This wasn't just about preventing scams, it was about making sure the market was fair and transparent for everyone.
Hey, this scam, it specifically highlighted problems with how banking transactions were linked to the stock market. So a very specific area of vulnerability.
Exactly.
Sounds like a painful but very important lesson for the Indian financial system.
Absolutely.
And in the middle of all this change and reform, a new player emerges, the National Stock Exchange, the NSE, also in 1992.
It was a game changer. The NSE, unlike the BSE at that time, started with electronic trading right from the get-go. This was a major modernization. It brought efficiency, transparency, and competition to the market. The BSE was forced to adapt. It was a win-win for the entire market.
So a huge leap forward, technologically speaking. And along with this modernization comes the increasing presence of foreign institutional investors, the FIIs. And we see more companies going public through IPOs.
Exactly. Liberalization and a better regulatory environment. That was music to the ears of foreign investors. They came in bringing capital and new perspectives. And at the same time, more and more private companies were looking to the stock market to raise funds for growth and expansion. IPOs were on the rise. It was a period of rapid development.
As we head into the 2000s, India's IT and financial services sectors are booming. That must have been a major driver for the market as well.
Oh, for sure. The early 2000s was when India's IT and financial services really took off, and that growth was mirrored in the stock market. These sectors became the darlings of investors. They fueled a lot of optimism and attracted both domestic and international capital. It was a boom time.
And this is when the Sensex and the Nifty really become the key indicators. Everyone's watching them to see how the market is doing overall.
The Sensex, tracking the BSE, and the Nifty, tracking the NSE, they became the benchmarks, the go-to measures for the entire Indian market. It was like checking the market's pulse. And then there's the internet. Online trading platforms start popping up, and that must have made investing accessible to way more people.
Oh, absolutely. Online platforms were a game changer, especially for individual investors. It was suddenly so much easier to get into the market. No need to go through brokers, no need to be a high roller. People could invest from their homes. It really democratized the market.
Of course, we can't forget 2008, the global financial crisis. It impacted everyone. How did the Indian market weather that storm?
Well, 2008 was a rough year for everyone. The Indian stock market took a hit, no doubt. But here's the thing. India bounced back relatively quickly. Compared to many other major economies, India was more resilient. Experts believe that strong domestic demand and some pretty sound macroeconomic policies played a part. So bringing us up to the present day, the 2010s and 2020s, one thing that stands out is the huge increase in retail investors. What's behind that trend?
Smartphones. That's the big factor. Smartphones and easy-to-use trading apps. Apps like Zerodha, Grow, Upstocks, they've made investing super simple and accessible. You can literally invest from anywhere using your phone. And this has attracted a whole new generation of investors.
And India is also looking to establish itself as a major player on the global financial stage. There are initiatives like GIFT City.
GIFT City. That's the Gujarat International Finance Tech City. It's a huge project. Ambitious. The goal is to create a global financial hub right here in India, attract international investment, drive innovation, and make India a major player in financial services. It's a big statement.
And in recent years, the market's been hitting record highs. What's driving this growth?
Well, it's a combination of factors. You've got government policies supporting economic growth. You've got a booming startup ecosystem with lots of successful IPOs. And you've got strong foreign investment. The world is increasingly confident in India's economic potential. It's an exciting time.
It's amazing when you think about it. This market that started with a handful of people trading in Bombay has become this sophisticated, globally connected powerhouse.
I know. Right. And we've got a nice little recap here in our notes of some of the key milestones we've talked about, just to give you a clear timeline.
Yeah, let's go over those again.
All right. So 1875, that's when the BSE is officially established. Then, in 1956, we get the Securities Contracts Regulation Act. Big step for regulation. 1992 was a huge year. That's when SEBI and the NSE are both born. And then in 2000, derivatives trading is introduced. That adds a whole new level of complexity to the market. And finally, 2020. That's when we see the surge in retail investors and the market reaching those record highs.
It's quite a journey. It shows how much the Indian stock market has evolved. From its humble beginnings, it's become this force in the global economy. Liberalization in the early 90s was a turning point. And then the rapid advancements in technology, they just changed everything.
Completely agree. And this historical perspective is so important. If you want to understand where India's economy is headed, you need to understand its stock market. The market reflects the country's broader economic journey, the transformations it's undergone, and the challenges it still faces.
So given this incredible history and the growth trajectory, the big question is, what's next? What's going to be the next big thing that disrupts and reshapes the Indian stock market? Will it be more technological innovation, shifts in global economic power, new regulations? Who knows? It's something to think about. That's the exciting part. Thanks for joining us for this deep dive.